Soldiers, in this country today, we have slowing gross domestic product. Atlanta Fed has already said we're probably in a recession right now. We get the official number on the 28th. We've got an employment situation where more Americans are working 2 jobs just to make ends meet. Of course, you know all about inflation. It's at 9.1% if you just take that headline number that they report. And it's at over 11% for wholesale inflation. Now, we know that if you calculate it based on the way that the methodology they used prior to the 1980s, and it's over 17%. All of this is going on, and at the same time, the Fed is raising interest rates. So we got kind of a perfect storm there that could result in stagflation in a high interest rate environment. But guess what? Guess what the wealthy are doing in this environment? Well, I'll tell you this. They're doing something that you probably should consider doing yourself.
The universe is talking to us right now. You just gotta listen.
All right, guys, we're not burying the lead here. The wealthy are purchasing assets. The S&P 500 is down 16.63% year to date. I'm recording this on the 21st of July. You'll see it on the 22nd. So, Warren Buffett, Blackstone, BlackRock, a host of others, all of these serious investors are in the process of looking for bargains. Now, the weird thing about investing, especially when it comes to investing in the stock market and in real estate to an extent, when you talk about the retail investor, who's a retail investor? We are average folk who, just put their money out there and try to get it working. Okay. So when it comes to the retail investor, unfortunately, a lot of retail investors, not all, but a lot, they have a little schism in their investing psychology. Now, let me give you an example of what I mean. If you got a text message right now that said Amazon was having a sale and everything on that site was 16.63% off, you'd find something to buy. All of a sudden, things would come to you. Oh, I do need this. I do need that. Oh, and I want that. Okay, I've wanted it for a while, and now I can get it for 16.63% off. Well, it's kind of funny because our psychology reverses when it comes to the stock market. When it comes to the stock market, a lot of investors, retail investors, do the exact opposite of what they should do. They buy high and then sell low because you get a couple of things going on here. You get FOMO when it's time to buy. So you hear everyone owns Tesla. You get FOMO, fear of missing out. And you want to own Tesla too because you don't want to miss out. You don't want to miss out on Bitcoin when you hear about it. But by the time you hear about it in a way that will give you FOMO is when it's already run up, more than likely. And then you turn right around. When the damn thing starts to, fall in value, a lot of retail investors do not buy more. They lock in losses and sell below the level at which they bought, therefore losing money. So I want to encourage you to just look within yourself and see if you've ever exercised that type of investing psychology. And also, look within yourself to decide for yourself which is a smarter move. Now, one of the reasons why people, act like that is because they don't do their due diligence. So they don't know what the fundamentals of the company are, and they don't know what fundamentals to take a look at in order to figure out whether or not they should stay the course or, whether or not it's just untenable. I'll give you an example. Microsoft is down 20%. They're actually almost down 21% year to date. Okay, they've taken it on the chin, just like a lot of the tech companies have. But guess what? Over the 5-year, Microsoft is up 262%. And the lifetime return for the company is 264,000%. So even though Microsoft is losing some value right now in this current environment, you know what? Microsoft is still in the vicinity of its all-time high. Now, let's take a look at some of the wealthy that are out there purchasing assets. Let's take a look at what they're buying. Now, first off, let's talk about silver. Silver is at a 1-year low. A year ago, silver was trading for about $25.50 a share, an ounce rather, and now it's down in the neighborhood of $19. So there is apparently some American female billionaire who has placed an order for 1 million, let's just say a large amount, of silver eagle 1-ounce coins. Okay. And a couple of guys are saying that they actually filled the order. Now, they're saying in this article, and I will be completely transparent, that they can't really verify the veracity of this news. And I think that's for a good reason. If you just bought close to 1 million ounces of silver, would you really want that to be, would you want your name in the news? You wouldn't want all that. So you would somehow make that transaction happen, and then you would just, fade into the background. In fact, whoever purchased it probably was an intermediary for the actual purchaser, to kind of, cover up that and remain anonymous. There's a lot of value in that. So silver, someone has seen that it's at a year low, and they've said, okay, now's the time. Let me pull the trigger and load up on some silver. Remember, silver is a component in every electronic product we use. So there is some real industrial use there. Let's go on over and talk about Mr. Aw Shucks, Mr. Midwestern sensibilities himself, Warren Buffett. He has boosted his stake in Occidental Petroleum. When we say he, we're talking about his company, Berkshire Hathaway. Occidental shares are up 92% for the year, dramatically outperforming the S&P 500. Now, I know what you're going to say. Well, Tyrone, you just said that you should buy low. And maybe Warren Buffett is feeling that he is buying low. And I'm going to tell you why he probably feels that way. Because this energy crisis that's going on in the world today, it can only have two outcomes. Either you crash the global economy. This world uses 88 million barrels of oil per day. That is a rock solid statistic. That's what it takes to run the engine that is our global society. So either you're going to just say, you know what, we're not going to have that anymore, and we're going back to Little House on the Prairie, okay? And we're going to be riding horses instead of driving around in cars. Either we're going to do that, or oil as an investment, the commodity of oil is going to look a lot better because all of this oil from Russia has been taken offline and directed elsewhere in the world. South African oil has been taken offline due to some technical issues that they're having. There's a lot of turmoil with that energy source right now. And to boot, the world is still trying to get into a mode where we're growing our economies. You can't grow your economy with the technology that we have currently without some of these more traditional forms of energy. Okay. Listen, I always say it. A lot of people don't understand where their electricity comes from. Just go ask the average person. Say, hey, can you tell me where electricity comes from? And I guarantee you most people don't know. They just think that there's a magical garden gnome behind the wall. And when you plug something in, then, he casts a spell and you have energy. Okay. Very few people make the connection that when they're sitting at a train track and the train is going by and there are like 50 cars full of coal, very few people make that connection. So oil is here to stay for the foreseeable future. Now, let me tell you when you will know that oil is over. When you see Air Force One kitted out with solar panels and maybe a wind turbine, then, okay, oil is done. But until you see that, or until you see an aircraft carrier with a sail, all right, then, until then, oil is here to stay. So Buffett's buying more Occidental Petroleum. He's buying it at a high because he thinks that it's going even higher. Okay. And let me tell you something else about Warren Buffett. His, train company, Burlington Northern Santa Fe, I think, I want to check that because I always get that, confused. In any event, Buffett's railroad is, a major carrier of oil, and it is Burlington Northern Santa Fe. I used to own shares in that. It's a major transporter of oil. Okay. That's why Warren Buffett doesn't like pipelines, because he wants you to put your oil on his train. He doesn't make money. There's no Berkshire Hathaway pipeline. Okay. So he's kind of, taking a lot of control over Occidental Petroleum. The stake that they bought in the company brings Berkshire Hathaway's ownership up to 16%. So with that kind of influence, you know that a lot of their product is going to be shipped on Warren Buffett's trains. The guy's the genius. I mean, but this is what you can do when you own intersecting assets. Okay. Just like when you have a real estate sales company, all those clients are going to have certain financial services products. And so it's like chocolate and peanut butter. All right. What else is going on out there? Well, we went over the silver. We went over, oil. And now let's talk about Blackstone. Blackstone, according to the Wall Street Journal, is in the final stages of raising a new real estate fund that would set a record as the biggest vehicle of its kind, defying market volatility and a crowded landscape for fundraising. The private equity giant, Blackstone, not BlackRock, that's a separate company, Blackstone said in a regulatory filing on Wednesday, it is closed on commitments totaling $24.1 billion for Blackstone Real Estate Partners X, or 10. I'm not sure how they're using the X. The latest iteration of its main real estate fund. Together with funds dedicated for real estate in Asia and Europe, they're going global. They've gone global. Blackstone will have a war chest of more than $50 billion to do so-called opportunistic investments, which tend to be higher risk deals with the potential for higher returns. Now, that $50 billion represents a hell of a lot more power than just $50 billion. Okay? Because remember, real estate is an asset that you can use leverage to control. So if you've got, let's say they've got their eyes on a property that cost $10 million. Let's just take it up to, they've got, let's just take it up to $1 billion. Let's do that so we can kind of match it up with the denomination of $50 billion that they are going to be bringing to the table to make these deals. All right, so let's say they identify a property worth $1 billion that they want to put some money into and control and maybe get rents out of it somehow. Well, they don't have to put up $1 billion. They have to put up a percentage of that in order to control it. And then from there, they get a mortgage on the remaining amount. And that mortgage would allow them to get a tax advantage on the interest paid on the mortgage. It would allow them to have, let's say they had to put up 10% of $1 billion. So then they would have $900 million left to invest with. So you see how that, so they've got what, they said $50 billion for opportunistic investments. So that $50 billion is going to represent a whole lot more in terms of their potential to purchase real estate. It's a beautiful thing about real estate. It's got a lot of tax deductions associated with it, and you can use leverage. You don't have to come to the table with the entire amount. Okay. So I find it very interesting. I'll save that for just a second. So anyway, this is what the wealthy are doing. They are purchasing assets. So this is why we preach every day, all day, that you need to remain in a position to be able to purchase assets. So in this inflationary environment, when I know you may have been impacted by having to pay higher costs for gasoline, food, kids' clothing, what have you. But to the extent that you can control those costs, and we did a video on controlling those costs, okay, one way that you can do that, we did a video on that, check it out. To the extent that you can make that happen, then you're gold. You can still have money to invest in appreciating, income-producing assets. All right, now, what I said I was going to save for later. It's very interesting that Blackstone is purchasing real estate. CNBC recently did a article talking about how purchasing a home was not a smart investment. Now, we talked about the fact that purchasing a home is an investment, but it's an investment that transcends money because it's a lot of, first of all, you need a shelter. Second of all, you want to raise your family, create memories, do things like that. But yes, indeed, your home is an investment and it is an asset. It just has some different characteristics from other assets that you might own. You don't live in your stock portfolio, okay? You don't live in, the commodities that you may own or the business that you may own. You might not live in the business that you own. Some people do. But whatever. They're trying to hustle and make it, so that's acceptable. But your home does allow you to use leverage to purchase it and control it. And then from there, you can exercise the equity, if you have any, if you want to at some point. You still have a lot of financial capability when you purchase a home. Okay, so having said all that, watch this video. We're going to show you exactly why CNBC is dead wrong. Purchasing a home is not a bad idea. Watch the video. We're fair in that video. And it's very enlightening, and it's going to put you on the right course. All right, soldiers, I'll talk to you soon.